Hi everyone, and thank you for tuning in. In this video, I'm going to highlight the top 3 Cathie Wood stocks to buy now. Now, you are all probably aware Cathie Wood is a popular investment manager. Her ARK Innovation ETF is home to some of the most innovative companies in the world. Her top 25 holdings include some popular names like Tesla, Zoom, Roku, Nvidia, Shopify, DraftKings, Twilio, Robinhood, and so I'm picking out my top 3 of Cathie Wood's stocks to buy now. And here they are. The top 3 stocks I recommend buying now from Cathie Wood's ARK Innovation ETF is Shopify, Roblox, and Roku. Let's go through them one at a time. Shopify is an e-commerce enabler, and e-commerce is estimated to become a larger share of purchasing worldwide. And so as people spend more money online, more merchants are going to go to the Shopify platform, and Shopify earns a monthly recurring revenue from merchants as well as a small percentage fee from each sale on the platform. So it gets a monthly fee and a percentage from the revenue on the platform, and it's in an excellent position to benefit from the rise in e-commerce sales over the next few years. It's also relatively inexpensive, trading at its lowest price to sales in the last 5 years. If we look here on the top right, I have listed the 3 stocks that I am recommending to buy. And Shopify in the blue here is trading at a price to sales of 7.4, near the lowest it has, arguably the lowest it has been in the last, I have it here the last 3 years, but I checked earlier and it was the cheapest going back to the last 5 years. So it's always helpful to buy, the mantra goes buy low and sell high. And so there you have it. Shopify is at a cheap price, so you're buying low. Another benefit here is that the e-commerce industry is becoming less competitive. Rivals such as Amazon, eBay, Etsy are all raising fees on merchants. And so industry wide, the fees are going up. That means more revenue coming to the e-commerce platform providers and increasing profitability for the industry overall. And that's good news for investors. Okay, the second stock that I mentioned to buy from Cathie Wood ARK ETF portfolio is Roblox. Roblox, of course, is the metaverse pioneer, and according to McKinsey, which is a massive consulting company, widely respected, they estimate that the metaverse industry could generate 5 trillion in sales by 2030. And if that's the case, Roblox is in a great position to benefit from that, being that it's been in the metaverse industry for 16 years now. It's already got close to 60 million daily active users. And so if the metaverse spending in the metaverse rises, Roblox stands to gain from that. Roblox has an asset-light business model that brings in cash before it pays for content. So Roblox is free to join and use for the most part. They make revenue by selling premium in-game items that you need to buy the Robux currency for. But what happens for Roblox is that it does not have those creations in-house. It outsources those creations, and it pays third-party developers only after its users have spent money on their items. So Roblox only pays developers for experiences and creations that their customers love. And customers deposit money first. Roblox gets that money first, and then it pays developers after customers spend it. So that's a less risky business model that should be beneficial for cash flows going forward. Similarly, like Shopify, Roblox is selling at near its lowest price to sales in years. I show here Roblox in the purple price to sales. It's at 9.35. Again, the lowest going back in its brief history as a publicly traded company. It only became public earlier in 2021. And so arguably the cheapest it's ever been. So you're getting two innovative stocks there at close to their cheapest price to sales they've ever been at. Okay, moving on to the third one, Roku. Roku, you might already know, you might be familiar with. They sell the little players that connect to TVs, which connects them into the Roku platform. On the platform, you can aggregate all of your streaming accounts, so you can have Netflix, Disney Plus, Hulu, all of that on the Roku interface, so that you can access them and switch through them relatively quickly. And while you're on the platform, Roku generates revenue from all of the transactions that you might undertake. So if you were to go on the Roku platform and subscribe to a new streaming service, Roku would get a percentage of that sale. If you're on the Roku platform and you get shown an advertisement, Roku would get a percentage of that advertising revenue that's generated. So Roku's main goal is to get you on the platform, because once you're on the platform, it can just generate revenue from your activity over the next, as long as you're on the platform. So if you stick around for several years, then that's several years of revenue that Roku generates from you. And it's important to note that Roku's platform is effective. It's reliable. Because of that, it's become the _1 TV operating system in the US, and it's the #2 in Mexico, and it's gaining traction there too. It's only recently begun expanding internationally, so it's in the early stages of that. If this trend continues, it has several countries it can expand to, and the opportunity can grow massively from there. There are 1 billion internet connected households in the world, and Roku has roughly 65 million active accounts. So there's a long runway for it to continue to expand there. And over the next several years in the US alone, there's going to be 10 million people that will switch from the traditional cable or satellite connection to a streaming connection. And I already noted that Roku is the most popular TV platform in the US. So it's very likely that Roku will absorb or capture a few million of those 10 million that cancel cable and move to streaming. Many of those will likely connect to streaming through Roku, so it stands to benefit there. And like the other two I mentioned earlier, Roku's trading at near its lowest price to sales in the last 3 years. I show here Roku's price to sales in the orange, and it has gone all the way down to 2.9. So the lowest it's been going back all the way even before 2020. So all three of these Cathie Wood innovative stocks are trading at their lowest valuations. And I will admit that's one of the main reasons why I selected them as the top picks from Cathie Wood's portfolio. But also another reason I selected them is because they each have a powerful tailwind at its back that's pushing industry growth higher. Shopify with e-commerce growth, Roblox with the metaverse industry growth, and Roku with the shift from traditional cable and satellite TV viewing to the streaming content viewing. So those are the main two selling points that attracted me to select these three out of the several excellent businesses in Cathie Wood's portfolio. So let me know what you think of these stocks. Which three would you pick out of her portfolio? Would you pick a different three? Would you pick these same three that I picked? I'm interested to find out, so let me know in the comments below, and I'll see you next time.
I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with the Motley Fool to bring you 10 stock picks from their popular Stock Advisor. Stock Advisor has beat the market by more than 250%. Go to fool.com/Parkev to get your 10 stock picks now.